Today, fellow investors, the Congressional Budget Office came out in June with the long-term outlook for the budget, and I think there are things there that anyone in the world needs to know and must see. Therefore, I did this video, but I also suggest you to read a little bit about what they are projecting and how does that work over the long term. There are the numbers, written, everything, but in this video, as it is a video, I will focus on the charts, and let's start with deficits and debt. Now, when you look at this is spending over the last 70 years, and it is projected that each year the government will just have larger and larger deficits. So imagine going to the bank and saying, I will spend more than I make for the next 30 years, give me not a loan, give me an account. You won't even get an account with the bank, but the government says they can print their own money. Think that will be a game that they will be able to play forever, and that is the first projection. The government will spend as much as they can. And then they look at the debt versus GDP, and that will balloon, I think, even more than the projections here, because as said, if your outlays are forever bigger than the revenues, then it will get ugly. But don't worry, I have something much more scarier than this. You have the discussions on what they are spending on. Of course, net interest will be a larger and larger percent of GDP, Social Security, major healthcare programs, and you can see here that they will go from 20 to 30% of GDP over 30 years. That's a huge number to be covered by the government. Of course, as there is more debt, the interest becomes a bigger and bigger part of the outlays, just 10% now. With higher interest rates, it will be a quarter. Imagine paying a loan and a quarter of everything that you make in a year goes not to repay the loan, but to pay the interest. That's something very, very scary. And I'm just piling up on the scary things here. So we have aging of the population. Of course, every one of us is scared about that. I'm also getting older. You cannot believe that. But major healthcare programs, social securities, that's going to look uglier and uglier. Demographics, net immigration in the US is holding things above water, but also people are making less love, thus deaths will be higher than the number of births by 2024. Of course, economics, uglier demographics than the great demographics in the past, especially the baby booms that have led the last 6-7 decades of growth. Again, something to think about, people. Maybe robotics will help us, who knows, but we will see. And then, again, a projection on 10-year treasury notes. Of course, no one can project treasuries, but for now, the market and the Fed, everyone is projecting this, that interest rates will remain lower. This is around 3%. What if this happens? What if average interest rates go back to the 1990s? Then all the projections the office has done fail and are useless because they cannot predict rates. And Druckenmiller, as we said in a video, said that rates can go higher or lower, also for the long term, so nobody knows. And therefore, the scariest part of this projection is that it's just a projection, and it can get much, much uglier than what is shown there. And then the politician says, oh, we based our promises on those projections. These are just statistical projections that can or might not happen. Even if there is a 1% chance of something happening, if that happens, it happened. That's reality. The other side is statistics. Again, population demographics, flat young people, so flat working force, increasing, 65 and older. I'll also hit 65 and older somewhere here. Okay, so I'll try to contribute my part for a while, but the demographics also Europe are not that stellar. And here we come to projections of growth, real GDP Keep in mind this is potential GDP, and given the ugly things we have discussed, the potential GDP is going lower and lower, and with less economic growth, everything looks uglier. With high debt, with bad demographics, less economic growth, less workforce, it looks very ugly. Perhaps the scariest part of this presentation, their projection is for a slow decline in GDP. But what if we have a recession? Then it boomed. What if we have a recession? Recession, recession. And that the average is then here, this, from 2% to 1% reality, this would be a huge, huge hit to all the projections, to all the spending, to all the budget, to everything. And I know these projections they make are wrong. I'm scared that the scenarios will be on the worst side of their projections, and then it gets really scary. Inflation, yeah, we now have temporary high inflation, then it will go back to 2%, and it will not be like this. So what is more likely? A linear projection or something like this? My life looks more like this, not like this. So I don't know how your life will go. And then interest rate on treasury notes, maybe it will be 6%, maybe 8%, maybe 20% like Volcker pushed it, maybe 2%. Nobody knows, but the fact that nobody knows and the fundamentals are already bad, and we know that they will get worse with demographics, with debt, with higher interest payments, with everything, with higher entitlements. Guys, that's something we need to know, and my message is, okay, we as individuals have to do the best so that we take care of ourselves first. Pensions will be lower, taxes will be higher in the next 10-20 years. That's a given. Money will be printed, thus purchasing power will go lower. Inflation is a way to tax you, don't worry, don't fool yourself. So we need to find a way that we are protected investing. That's what we do here with value investing. That's it for now. Subscribe, check what I do on my research platform. I'll see you in the next video.